Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that separates the consistently profitable traders from the crowd. It's not about finding a magic indicator or a secret strategy. It's about two words that echo in the halls of Wall Street and in the minds of the greatest traders of all time: patience and discipline. Think about it. We've all been there. You see a stock moving. You feel that FOMO, that fear of missing out, and you jump in. The next thing you know, the market reverses, and you're staring at a red screen, wondering what went wrong. Or maybe you had a solid trading plan, but you got scared and closed your position too early, only to watch it soar to your original target. Sound familiar? The truth is, the market is a master at playing with our emotions. It preys on our greed, our fear, and our impatience. The legendary Jesse Livermore, one of the most famous traders in history, said the big money was not in the buying or the selling, but in the waiting. He called it sitting tight. It wasn't about frantically trading every day. It was about identifying the right opportunity and having the discipline to wait for it, and then the patience to let it play out. So, how do we cultivate this Wall Street level patience and discipline? Let's break it down into actionable steps. First, you need a rock-solid trading plan. This is your constitution, your rule book. It's not just about entry and exit signals. Your plan must define what kind of setups you trade. Your risk management rules, like how much you're willing to lose on a single trade end. Your profit targets. Writing it down makes it real. It forces you to think through every detail before your money and your emotions are on the line. When you have a plan, you're no longer gambling. You're operating a business. Let's look at a chart to see what this means in practice. Imagine we're looking at a daily chart of a popular stock. Here, we see it's been in a strong up. Your plan might say, I only buy in an uptrend during a pullback to a key support level, like the 50-day moving average. So, you see the price is high up here. The impatient trader jumps in, afraid of missing more upside. But you, the disciplined trader, you wait. You watch as the price pulls back over several days, getting closer and closer to that moving average. Your finger isn't on the buy button yet. You're waiting for confirmation. Maybe it's a bullish candlestick pattern, or a bounce with strong volume right at that support level. Here it is. This is your signal. This is the moment your plan told you to act. You didn't force a trade. You let the market come to you. That's patience in action. The second key is discipline. And discipline is simply the act of following your plan, especially when it's hard. This is where most traders fail. The market will test you. You'll have losing streaks, and you'll be tempted to abandon your strategy. But as legendary hedge fund manager Ray Dalio says, you need to have principles and stick to them. Let's go back to our chart example. So, you've entered the trade here at the support level with a clear stop loss placed just below it, according to your risk management rules. Now, discipline comes into play. The trade might not immediately blast off in your favor. It might chop around for a few days. You might even see it go slightly negative. This is the moment your fear kicks in. The voice in your head says, just take the small loss and get out. But your plan had a predefined stop loss for a reason. Discipline is trusting your analysis and letting the trade have room to breathe. As long as your stop loss isn't hit, you have to honor your stops, no exceptions. Don't move your stop loss further away because you hope it will turn around. Hope is not a strategy. Now let's talk about the other side, taking profits. Patience is also about letting your winners run. It's just as easy to be scared out of a winning trade as a losing one. Let's say our trade is now moving nicely in our favor. The price is climbing. Your plan might have two profit targets. Target one is here, where you take some profits off the table to secure a gain. This is smart risk management, but you don't close the whole position. You let the rest run with a trailing stop loss to capture a bigger move. The impatient trader would have taken the small win and been gone. The disciplined trader follows their plan to maximize their gains from a high probability setup. As you can see on the chart, the stock continued to rally much further. That's the big money Jesse Livermore was talking about. You don't get that by taking tiny profits every time. One of the greatest traders of our time, Paul Tudor Jones, has a sign on his office wall that says, "Losers average losers." This is a powerful lesson in discipline. It means don't add to a losing position. If a trade is going against you, and it hits your stop loss, you were wrong. That's it. You accept the small, manageable loss and move on to the next opportunity. The undisciplined trader will average down, throwing good money after bad, turning a small, manageable loss into a catastrophic one. Your ego is your greatest enemy in trading. You must be able to admit when you're wrong. Take the hit and preserve your capital to trade another day. So, how do we build this mental muscle? Start small. Focus on the process, not the money. Your goal for the next month shouldn't be to make a certain amount of money, but to follow your trading plan on every single trade with 0 exceptions. Keep a trading journal. Write down why you took a trade, how you felt, and whether you followed your plan. Review it weekly. This journal will be your best teacher. It will show you where your emotional weaknesses are. Are you revenge trading after a loss? Are you jumping into trades out of boredom? The data will expose your bad habits, and awareness is the first step to change. Remember the story of the turtle and the hare? Trading is a marathon, not a sprint. The hare, full of excitement and impatience, gets burned out. The turtle, with a slow, steady, and disciplined approach, wins the race. Your goal is not to have one spectacular trade that makes you a fortune. Your goal is to develop a system and the psychological fortitude to execute it consistently over time, allowing the power of compounding to work for you. The lessons from Wall Street giants aren't complex formulas. They are timeless principles of human psychology. Master your own mind before you try to master the market. Create your rules, trust your rules, and have the patience to wait for the perfect pitch. Don't swing at everything. Wait for that fat pitch right in your sweet spot, and then execute your plan flawlessly. That is the path to long-term, sustainable success in trading. Thanks for watching today. If this resonated with you, hit that like button and subscribe for more content on building a professional trading mindset. Let me know in the comments what your biggest struggle is with patience or discipline. Let's learn from each other. See you in the next video.